Markets start the week on a healthy note, ending the session at day's high. The Nifty holds about 26,150 levels. Mid-caps move in line with the frontline indices.
SEBI Chairman Tuhin Kanta Pandey says commodities is high on the regulator's agenda and rules are being reviewed to deepen the market, allows insurance and bank to participate along with efforts to iron out GST issues in consultation with the GST Council.
The shares of KC International rally after relief from the Delhi High Court allows the company to continue bidding for power grids tenders. Remember, the transmission company had banned KC from tenders for 9 months.
The MD of Shriram Finance, Umesh Revankar, speaks first to CNBC-TV18 days after sealing India's biggest FDI in the financial services sector. Says the deal with Japan's MUFG gives them 100-year runway. Expects a 100 basis points reduction in cost of funds in the next 2 years.
Hello and welcome to Markets Forward on CNBC-TV18, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vinny Motiwala, with me is my colleague Vivek here as well. Vivek, it's been a day where we opened up on a strong footing and continued that at the end of the day. 26,100 above that level. So no complaining today for the bulls. Everyone, I think, Merry Christmas coming in for the markets as well.
That's right. Good afternoon, Vinny. Absolutely, the Santa rally, the much-famed Santa rally. At least we started off the week on a strong note. It's the truncated session, just 4 trading days. That is something, too, that the markets will look forward to. Well, we have a lot lined up on the show. Here's the lineup of what we have in store for you today. We start with the top movers and shakers of the day. With Hormas, we get your reports on Delhi High Court relief to KC International, Vikram Sola's rating upgrade, and exclusive chat with Shriram Finance's MD. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session. But first up, this is our first segment of the day. Hormas Fataka joins us now from the big wall, the top movers and shakers of the day. Hormas, over to you.
Well, it was a day when almost everything that you touched turned into gold. So there's no prices for guessing that almost all sectoral indices did well today. IT stocks, of course, were no different. And almost mid-cap IT, large-cap IT, all of it did well. Infosys, after all the hoopla over the weekend, did well today. 3% higher on that stock. Persistent, Wipro, Tech Mahindra, all of them contributing towards the up move on the Nifty. What also did well today were the metal names, and they have continued to do well over the last month or so now, with precious metals, commodities, all of them being in a very strong uptrend. Hindustan Copper, Nalco at record highs, Hindustan Zinc now past 600, heading towards those 800 levels that they had once hit in May of last year, and they continue to do well as well. Now, newsmakers for today, HCC, after its rights issue was fully subscribed, ending 7% higher. Meesho, a 10% lower circuit, now down 20% from its post-listing high. Dixon Tech, where Morgan Stanley has raised some concerns in a note today, the stock ending 3% lower. And Tata Motors Commercial Vehicles, a third bullish initiation in the last 2 sessions. Now, at 52-week highs, stocks like MCX at record highs today, almost 5% higher. M&M Financial, Shriram Finance, of course, the big talking point over the last 2 days. RR Kabel, Kirloskar Oil also doing well in today's session, ending at 52-week high levels. And lastly, bucking the trend in what has been an otherwise strong market, Siemens Energy India was the stock that I was referring to, not Siemens, but Chola Finance, Hexaware. Chola Finance, of course, the pair trade of long Shriram Finance, short Chola is what is emerging as what analysts are also talking about. Hexaware, one of the few IT names that didn't do well in today's session, down almost 6% in today's session. And Reliance Power too, not having a very good day at the office. Back to you guys.
Thank you so much for that, Hormas, for highlighting those key movers in today's trade. But let's also talk about 2 other names that were in focus today. Shares of KC International, they were buzzing in trade. And why? Because the Delhi High Court has given some relief to the company and has allowed the company now to continue bidding for power grids orders. Power grid accounts to around 4% of their order intake in the year FY26 so far. And as per the Q2 FY26 order book as well, 15% share in that order book came in from power grid. So an important update there. there. Delhi High Court staying the order of Power Grid and allowing KC International to participate in tenders is surely a positive that comes in there. Apart from that, we had GE Vernova T&D. That's also a one that is in focus today. They received a very big order from Adani Energy Solutions, and this order was for the HVDC segment in South Olpad, which was an important order that everyone was waiting for. Now, analysts are anticipating the cost of this project could be somewhere between 16,000 to 18,000 crores. A big order win there. And apart from that, like Hormaz also mentioned, Siemens Energy, that's the one where that was a bit under pressure. Hitachi Energy is another company, that are competition to GE Vernova. So they are seeing some bit of a pressure because it was expected that maybe it could go to one of them, and that is why that pressure comes in there. Now GE Vernova has won, so they're not getting that order, and that is why we're keeping an eye out on the cap goods space. Now, on that note, let's also bring on board our guests for today. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, as well as Jay Thakkar of ICICI Securities joining us. Mayuresh, before we come with the individual stocks to you, firstly, let's take a look at the market, right? Because Jay, we managed to close about 26,100. I just hope it's going to continue through the week this year. Will we see this stay, or will we see a bit of a pullback now?
Yeah, and I think that finally we have seen this breakout coming above the levels of 26,000 once again. I mean, it has done multiple occasions earlier as well, and I think that now on the downside, 25,700 levels has been proved as a very critical support. So now till those levels are held, rather I would not look at 26, but I would look at maybe 25,700 to 800 range. That has acted as a very critical support. Until those levels are held, I think market is likely to inch towards the levels of 26,500, at least in this December series. Tomorrow we have this weekly expiry, and next week we have this monthly expiry as well. So either by the end of December, which has been so far the one of the longest series, or maybe at the start of Jan, we will be seeing 26,500 quite likely. And it's just that the private sector banks, because of which the bank Nifty is now relatively underperforming the Nifty and the broader market since past two trading sessions. Otherwise, the FI data in the equity cash segment as well as the FNO segment in the last couple of trading sessions has been positive. And I think looking at these overall combinedly, the probability of 26,500 is higher, whereas 25,700 to 800 level will act as a critical support. And till those levels are held, I think the short-term trend is bullish.
Well, I'll take a point completely on board, Jay. Short-term trend looks bullish. But Mayuresh, good afternoon, and thank you so much for joining us. Well, Mayuresh, you just heard Vinny speak about the large order win that GE Vernova T&D got. Well, the capital goods space, at least post Q2, has underperformed a little bit. Do you feel that the tide is now turning? Do you feel large order wins can come? And what are your top picks in that particular space? Mayuresh, you're on mute.
Sorry for that. Absolutely, Vivek. I think no two ways about it. I think the accelerated spending will start coming through as we head into the next few months. Government capex should largely be on track. Private capex is coming back very, very strongly. And therefore, capital goods stroke infrastructure stroke manufacturing as a theme should continue doing well over the next few years. Let's not also forget, Vivek, that we are heading into the budget over the next month and a half. And therefore, I think allocation in terms of infrastructure and infrastructure sector as a whole, with some more added benefits expected to come under Section 80IA, more sectors probably getting added, might actually create a fillip, not just for the banking industry in terms of lending mechanisms, but for the overall capital goods stroke infra stroke manufacturing space. Having said that, I think leadership stocks like L&T is something that we continue preferring within the space itself. Out of the power transmission names, our own take is that larger names like a Power Grid, NTPC selectively will continue doing well. Power Mech, Torrent Power, might actually continue doing well as well from the private space. When it comes to a lot of these road manufacturing companies, they have got beaten down quite significantly. So I think it's worthwhile looking at a few of them. We've got a few of them on our radars.
Well, you're absolutely right. The road manufacturing companies or the road builders clearly have seen a significant derating in the last year on the back of the fact that NHAI bidding has remained quite muted. But one particular stock, from the solar manufacturing space that did quite well today was Vikram Solar. Now, this is essentially what transpired over the weekend. The company gave an update to the exchanges saying that they had got a ratings upgrade for their credit facilities from a ratings agency known as India Ratings. India Ratings upgraded the ratings assigned to both the long-term as well as the short-term bank facilities from IND A stable to IND A plus stable. This is as far as the long-term bank facilities was concerned. And as far as the short-term bank facility was concerned, it was upgraded from IND A1 to IND A1 plus. We remember, the order book as far as Vikram Solar is concerned, a little over 11 gigawatt. So an upgrade as far as the credit rating is concerned is something that helps reduce the finance cost for a player like Vikram Solar.
So that will be important for them over there as well. But, let's also talk to our guests on this as well. Jay, your thoughts on Vikram Solar? Anything on the charts, technicals? What are you watching out for?
Well, see, we have a very limited, I would say, chart history of Vikram Solar, but then recently we have seen this stock, falling quite a lot from his listing price, almost from 380 levels until 220 odd levels, and today we have seen that bounce back coming in this stock, particularly by almost more than 5% or approximately that. This is the first day of bounce, I would say, Vinny, as of now, and still there is no much of clarity on the charts as far as technicals is concerned. So, would like to avoid this rather. I would say within the power space, I would like to share one thing is that when we have seen overall since past couple of trading months, we have seen more of short buildup, within the power space, and power space has today some of power finance names has shown some short covering or indicated some short covering in today's session as well as in the last trading session. So from here on ahead of the budget, I think mostly all the beaten down names as far as defense, railway stocks, rail finance, power finance, all of these are likely to see some bounce back. And I think within power space also you'll see overall short covering happening, maybe due to the Santa rally or maybe pre-budget rally. So those things can happen in coming few trading sessions. And among that, I think PFC, RAC, these are the names which can see some significant short covering in December end or maybe in Jan series also going forward.
Well, that's right, Jay. 2025 has been one of those years very surprisingly where power demand has been quite muted. On the back of that, power stocks have done quite muted, and capex commissioning too have been very subdued in the year gone by. But moving on, shares of MCX surged after SEBI chairman Tuhin Kanta Pandey said the regulator is considering allowing brokers and insurers to participate in commodity derivatives. He added that talks are ongoing with the central bank and the insurance regulator on this prospect. Sudarshan Kumar joins us now with more details.
MCX today has seen a big move. The stock has surged up to 5%. The reason, recently you have seen that the turnover for MCX has been moving higher over the last 3 months, and over the weekend there has been a comment from SEBI chairman, and he is looking at the participation in commodity derivatives from banks and insurance, and for the same he has been in talks with both RBI and IRDAI, that is the insurance regulator, and also he has already set up the expert working groups to deepen agricultural and commodity derivative. And even on the other front, he has been engaging with GST Council to resolve certain issues related to GST on commodity derivatives. And he's saying that once the issues are resolved, it will help in improving market liquidity and the volumes, not only for all the commodity derivatives, but also on the physical gold. So on the basis of two major reasons, on improving turnover and the positive commentary coming in from SEBI chairman, you have seen a big move in MCX shares today.
Thank you so much for that, Sud. But let's talk about the big newsmaker, right? Since Friday now, that is Shriram Finance. And we had Umesh Vivankar, Managing Director of Shriram Finance, who spoke to CNBC-TV18 just a few days after that sealing the largest foreign direct investment in the financial service sector. What he said that the deal with Japan's MUFG gives Shriram Finance a 100-year runway. He added that the cost of funds can go down by 100 basis points over the next 2 years if upgrades come in. Listen in.
We'll have a broader selection of broader sources to go, and that will bring down the cost further down. So apart from the strong balance sheet and rating upgrade, that should give us nearly, I believe, around 100 basis point decrease over the next 1.5 to 2 years, not immediately. Okay. It may take a longer time, but that will bring down my balance sheet cost of fund today is around 8.8.
Correct.
And that if it comes down to around 100 basis point in the next 2-3 years, that much I can pass it on to my customers.
Well, that was the management of Shriram Finance, clearly in the news on the back of the big bucks deal that they've just announced. Well, Mayuresh, coming to you, Shriram Finance continues to move higher. a lot of people on the street did anticipate that such a deal could come through. But despite that, this is a big ticket deal. How do you see the NBFC pack, especially CV financing, play out? Do you see valuations converging between Shriram Finance as well as Cholafin for a matter? And what is your top pick in the NBFC space?
It continues remaining Shriram and Bajaj Finance, Vivek, I think, and we continue holding them in our global portfolios. I think the rationale in terms of such a huge investment coming through, and as Mr. Revankar pointed out, I think it does add to the assets under management, but it also gives a fillip in terms of the overall lending book. The capital adequacy for Shriram Finance is already in higher double digits. And therefore, as that expands significantly, and as the balance sheet expands with the cost of borrowing going down, I think the return ratios will even have a further uptick as we head over the next 2 years, as you get regulatory approvals and the balance sheet starts growing with the new fund infusion that probably comes through. What it also does in terms of the NIMs and spreads, I think it normalizes them for Shriram Finance, but with efficiencies kicking in, even those might see improvement going forward. Even from a balance sheet construct, I think only 4 to 5% is in unsecured loans. The CV cycle is turning around clearly as far as the domestic market is concerned. And therefore, CV financing and other modes of product financing that they probably get about will lead to better growth dynamics going forward. The gap between Shriram and Chola might actually widen. And therefore, I think our own sense is that we continue holding on to the leaders within this space. Shriram and Bajaj Finance remain our top holdings in the NBFC space.
Okay, Shriram and Bajaj Finance are your top holdings over there. Jay, what's your view for Shriram Finance as well? Obviously, this deal has come through. The stock has been buzzing, right? In the last 6 months also, one could have gotten good returns, 41-42% uptick just in the last 6 months. What are we keeping an eye out on now for Shriram Finance in terms of levels?
Sure, Vinny. I mean, since October, when the stock broke out above the levels of 720 odd levels, I mean, we have been seeing a unidirectional move coming in this stock, and from 720, we need about 920. And I think, it's very, very much likely that this stock can be inched above the levels of 1000 as well. The way the momentum, is there in the overall stock as of now. And in the near term, I believe now 880 is a very critical support, Vinny. I mean, it's after, breaking out above 720, it moved till 880. It consolidated for a couple of trading days, and now again it has provided a breakout. So I think that till 880 levels are held, that is this previous swing high. I mean, the overall trend will be positive, and very likely the stock will be in 4 digits moving forward. The ultimate target could be as good as 1100 odd levels as well. More importantly, Vinny, what I would like to highlight is that we have continuously seen long build-up as far as the derivatives data is concerned in the futures segment. We have continuously seen a long build-up coming in this stock, despite the OI in this stock, particularly now remaining about 6 crores as well. I mean, earlier it was 3 crores, 3.5 crores. That has moved beyond 6 crores now. So despite at these levels, we are seeing more open interest addition, which is significant. So until unless we don't see a change in OI, which drops from 6 crores to maybe 5.5 or 5, there is no sign of long liquidation. I think the overall trend will be positive.
Okay. Well, Myresh, you did hear Jay speaking about this particular space. What's actually transpired is that over the last couple of days, the rupee has strengthened. Do you feel that this particular deal, maybe has had a certain role to play in that as well? And you spoke about Shriram Finance as well as Bajaj Finance. We also want your view as far as private banking is concerned.
When it comes to private banking, Vivek, I think the more important aspect to note here is how deposits are probably going to get accumulated for the larger private banks. The challenge is not in terms of growing advances. You've already seen that in terms of advances growth being very decent. The challenge will be in a falling interest rate scenario, which you already seen, and where interest rates on the deposit side will reset itself. How does deposit accretion probably happens, and therefore what happens to the cost of borrowing for a whole host of these large private banks? And therefore we are a little selective when it comes to the private space. In our own opinion, I think public sector banks have got a much stickier deposit base, a much legacy-owned deposit base that they can probably look up to. And therefore deposit growth there might actually continue at a reasonable pace with decent balance sheet growth happening there, with valuations also remaining in favor and rating rankings looking superb, along with institutional holding remaining strong. So as a preference, I think more skewed towards public sector banks, which have delivered good on numbers and better on numbers, being a little bit more selective on private players. A few of the mid-cap private players might actually do well, in my opinion.
Okay, thanks for the view there coming in, Mayuresh. And Mayuresh as well as Jaya, thank you so much for joining us on the show. As always, it's a pleasure getting your take on the markets as well as individual stock names. But on that note, we're going to step into a very short break. After the break, we'll get to the top corporate voices along with the key market events to watch out for in tomorrow's trading session. Stay tuned in.
Welcome back to Markets Forward. Well, one particular stock that did quite well in the session was Fortis Healthcare. Remember, Fortis signed an agreement to acquire the 125-bedded People Tree Hospital in Bangalore for 430 crore rupees. The company said that it will further scale up the facility with an investment of 410 crore rupees over the next 3 years.
On Warren Beverages, there was an important news for that came in that the company will acquire a South Africa-based company called Twiza through its local subsidiary Bevco at an enterprise value of 1,118 crore rupees. Now, Twiza makes and distributes its own brand of non-alcohol beverages and operates 3 manufacturing facilities in the country with a combined annual production capacity of 100 million cases. So, an important update there for Warren Beverages.
Well, here are the key takeaways of some corporate voices that joined us through the day. The shares of Nalco hit record highs after metal prices rallied. The company's management expects demand to outpace supply over the next 2 to 3 years, with some supply constraints likely going into the next year. The management added that EBITDA margins are expected around 42 to 45% in the third and fourth quarter.
We also spoke to the management of Welspun Living. We had Dipali Goenka, who's the chairperson as well as MD of the company, assured that the company will not lose market share in US even as the third quarter has been soft in terms of revenue and profitability. She said that US contribution to revenue has declined from 70 to 60% and the company is actively looking to diversify into markets like UK, Europe, Australia and other regions.
The management of Finiotex Chemicals told CNBC-TV18 that the company expects better deals from raw material suppliers, which should support margins. He said that the acquisition of 4 US-based chemical firms can become a $200 million business for the company in the next 3 to 4 years. Finiotex Chemicals also plans to increase its stake in the acquired entity to 75% over the next 3 years.
And before we wrap up this edition of Markets Forward, let's actually look at which are the key events to watch out for in tomorrow's trading session. For that, we have Gaurav joining us for that. Gaurav, over to you.
Well, yes. From the Indian market, if we look at the macro, we do not have any specific event to watch out for. But on a company-specific level, first let's talk about Adani Enterprises. Record date is tomorrow, where the rights issue, first call for rights issue will be called, and the eligible investors will get a call for 450 rupees per share. Remember, this is a partly paid rights issue, which was issued at 1800 rupees per share. Apart from that, from the board meeting perspective, we'll be watching out for Granules India and NIBE. Both these companies will have board meeting and they will consider fundraising for their own company. Other than that, Balkrishna Paper Mills. Now, this company is also going to be in focus because there is going to be a board meeting to consider a scheme for reduction of share capital. So let's watch out if anything material comes out of that meeting. From the IPO market, let's focus on KSH International IPO. Remember, the company came up with an IPO of 710 crores. Price band was between 365 to 384 rupees per share. But on a surprising note, if you look at the subscription data, it was undersubscribed. Subscription data suggests only 87% of the shares were subscribed. So let's see if there is any gain that investors can get from this IPO listing. And lastly, from the global market perspective, the focus will be on the US market because we will get third quarter's GDP data. Remember, the expectations are to be the data to be around 3.2% versus the last quarter where we saw GDP growth of around 3.8% for the US market. Other than that, consumer confidence index, that is something that we will be watching out for. And lastly, new home sales data, that is also something that will be important for US markets. But for now, we will be watching out on all these data points and see how it drives the market going ahead.
Well, thank you so much, Gaurav, for joining us with all of the events as well as individual stocks to keep an eye out for in tomorrow's trading session. But with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.